Thanks for tuning into the Finance News Network. I'm Jessica Amir, and joining us today from Capital Property Funds is Executive Director Joe Christie. Joe, welcome back.
Thanks, Jessica. How are you going?
Good, thanks. So first up, Joe, I'd just like to start off with an introduction to what your debt fund actually is. What can investors expect?
Investors into the debt fund, typically they're people that are looking for an income yield. So our property debt fund is yielding an 8% return, net of all fees and expenses. And then how the fund works, investors say, look, it's a great return, Joe, but what is a debt fund? And effectively we just sort of say, look, it's really you're becoming the bank, the investors are becoming the bank. And I use the analogy, if you're looking to buy a property, typically you would go to the bank. If you wanted to buy a property, say that was $1 million, you're going to need to borrow some money from the bank. You fill in an application form with the bank. If the bank approves that application, they would then lend you the money, and there'd be terms associated with that loan. And that's the same with our debt fund. So we have professional investors and developers who are looking to acquire property. They approach us and they submit an application form to our lending committee. We assess the application, and if it's approved, then we send a letter of offer back to the borrower. And then they need to accept that offer, and then once it's been accepted, we then circulate that to our investors, and they can choose to subscribe to that particular opportunity.
Great. So just before we go any further, what's the minimum investment requirement, and when does the investor get their money back?
The fund is open to mum and dad investors, self-managed super funds, retirees, so anybody can invest into the fund, provided that they meet some certain criteria. Now, the minimum investment is $50,000. And it's a very good question you ask, because look, the fund is what you would call an illiquid fund. You can't just hit a button and get your money back straight away. And typically it's a 12-month term. So what we do is we issue what's called an information memorandum for each offer, and that offer would stipulate what the term will be. So there's effectively you are locked in for the term of that offer. And we typically roll out an opportunity every 4 to 6 weeks. So investors can pick and choose the opportunities that they want to invest into. You do need to be what's called a sophisticated / wholesale investor, as defined by the Corporations Act. And effectively you really just need to complete a one-page application form that needs to be signed off by your accountant to say you meet that criteria. And it's not a difficult criteria to meet.
So it all sounds great, Joe, but if you wouldn't mind just sharing an example with us of a recent transaction.
The most recent deal that we did was one at Caboolture, which is a suburb just north of Brisbane. The quantum of that loan was about a $1.5 million loan, so a little bit smaller than normal. We generally like to sit between that $2 to $5 million mark, but this was a $1.5 million deal. What we liked about the deal was the borrower was somebody that was very well known to the team. So we'd had a long-term relationship with the borrower, nearly 20 years. They had a track record of always delivering. So we'd lent to them previously, and they were able to complete a development through to the end, pay us back. We also liked the asset as well, so we're very comfortable in the eastern seaboard, being Brisbane, Sydney and Melbourne, particularly in that residential market. So this was a rural land subdivision. It was a 3-stage development, so the developer had completed stage 1, so they'd done all the construction work and all the sales work as well, so all the lots had virtually been completely sold, so we had some very good comparable sales. It was moving into stage 2, or it had moved into stage 2, and the borrower was looking then to move out of a construction funding facility into what we call a marketing facility. So it's a slightly cheaper rate because the project had been de-risked. So that was about a $1.5 million deal. It was a first mortgage lend, so we only do first mortgages. And the other thing at Capital Property Funds, which I didn't touch on and I perhaps should have, is that we're really focused on the exit strategy. So it's very easy to lend money to people. The difficult part is getting the money back. And we're very, very comfortable on the exit strategy here. It was 9 lots, they were very reasonably priced, and the money gets paid back as the lots are sold. During that 12-month period, the loan to valuation ratio on this particular asset was actually 59%, but as the lots are repaid, the loan to valuation ratio comes down. So currently it's sitting at just above 50%, and they're still getting the 8% return. So it's a pretty good experience for the investors.
And just lastly, Joe, do you have any parting words for investors and potential investors?
Jessica, if they're interested in our debt fund, we'd encourage them to register their details on our website, and they can also download that accountant certificate, or they can contact us via email, and it's just info@capitalpropertyfunds.com.au.
Wonderful. Joe Christie, thank you so much for the update.
Thank you.